Hello everyone. In this session today, we are going to learn something about gold base. So let's have a standard disclaimer in place before we proceed on to the topic. So what do you mean by gold base? Okay. Gold base is something, it's a virtual form of gold. Maybe all of us might be aware of about physical gold. Physical gold is something, the jewelry, coins, all that. But gold base is something which is available in the virtual form. Okay. This might be a new terminology to many of you watching the video there. But definitely this is a very, one more, what we can say, one more way of investment in virtual form of gold. Okay, we are investing in gold, but not in a physical format, which is giving us the edge. Being anywhere, we can apply once, we can buy from the gold in demat account and hold it. It is available in stock exchanges, and it is very much available in stock exchanges, and we can buy from there. Now, gold ETF is something, ETF. What is meaning of ETF is exchange traded fund, and gold base is considered under that. Okay, maybe if you talk about, gold ETF is an animal, gold base is something called as elephant. Might be we can say. Okay, the classification is that the gold base is classified under ETF itself. It's a one type of ETF. Gold base is a one type of ETF. So in this gold base, BE stands for benchmark mutual fund, which actually they launched in 2007 initially, and later on the company called as Nippon India uh, took over this as a from the benchmark. So even though they took over, the Nippon India still kept the same name. As gold base, they did not change the name, just to keep the originality and the branding. And the ES stands for exchange scheme in the sense they actually buy the gold on behalf of us and hold it. Okay, so they buy these funds, actually whatever I mentioned on Nippon India fund, Nippon India ETF fund, or maybe there are a couple of other funds also. All these people actually buy the physical gold, and in the form of physical gold they buy and hold it, actually in place of whatever we are buying. So this is one very important terminology, and let's try to understand further more into this. Now, one is that, as I mentioned already, this is the purest form of gold, and the pros and cons are, one is that it is liquid because it's available in a demat account. You can sell out anytime and liquidate that. It is safe because you don't need any place or anything to hold there. If it is a physical form, you might require that. No storage necessary, so the place is not required. There is one particular thing comes, something called as the expense ratio, that we'll learn as we proceed now. And the demat account is required for buying the this particular ETF. So gold base India's first and most popular gold ETF is the Nippon India Gold ETF. That is ETF, that is gold base. Okay, and this particular gold base has a higher liquidity than any other ETFs over there. And definitely the analogy part is I've already explained you. It's like toothpaste versus Colgate. Okay, the gold base is one of the particular item which is available under the broadly available under the ETF. Okay, and the physical form of gold, the jewelry, coins, bars, all that comes. The process of this particular physical gold is tangible and has a cultural value. Cons is, it is having a making charges and storage and resale cuts. So definitely when you buy something, jewelry or something, it has a making charges. You need to store that also in safe place, or some locker or somewhere. And when you want to resell that, you will have a resale cards also in physical gold, which is available. So roughly around, maybe it is mentioned that around 10 to 15% of resale cut might also be there while when we sell the jewelry. Now, here this is a comparison table which is given for identifying that in a better way. The gold ETF, gold base versus the physical gold. Okay. Now the for the gold ETF you require a demat account. Demat units are required. It is in demat units, and second here it is in jewelry or coins format. And the liquidity is high in both the cases. But one is on the exchange. It is holding on exchange, so you can buy and sell on the all the days, working days of the exchange. And here other one, the physical gold is has a high liquidity factor is available, but it has some cuts as when you want to sell that. The third one is the storage. In case of gold base, there is no storage issue. In case of physical gold, you might require a locker or maybe some safe place. The fourth one is a cost. Here there is something called as expense ratio. And in physical gold, making charges and GST comes to existence. In it is in form of the gold ETF or a gold base is best for investors. The other one, physical gold, is best for consumers. Okay. Now we try to identify. No, expense ratio is something, these uh, funds actually charge as a holding charges. It is generally between 0.5 to 0.8 percentage on a per annum, and they charges these things to manage the whatever that running activity of whatever these funds are. They charge around 0.5 to 0.8 percentage. So that is one called as expense ratio. That is one thing which comes in physical form of, sorry, this ETF. Okay, in ETF form, the 0.5 to 0.8 percentage is charged as a expense ratio. Now, historical performance, let's try to understand in gold ETFs. There are two gold ETFs which I have mentioned here. One is a Nippon India Gold ETF Gold Bees, and second is one HDFC Gold ETF, that is also Gold Bees. Second one is also Gold Bees. Both are the same thing. There are many other Gold Bees available, but these two are the generally slightly famous among the investors. Now we can see, as we can see, the last 1 year it is given approximately a 46% return of these things, this gold base. The last 3 years is 27% on an average, and the last 5 years is the 14 and the change percentage which is given there. So roughly we can say last 10 years it has delivered a return of 14% to the investors. Definitely it has given last 1 year is a better return because of, as you can see, the gold prices have gone up like anything in last 1 year, and the gold base is the reflection of the or a mirror of the whatever the outside gold market is there. That is exactly the price is reflected onto the gold base, deducting that expense ratio adjusted against it. A small percentage of adjustment will be there as an expense ratio. Otherwise it is generally a mirror to the gold base. Here this comes to the last of our end of our session today. But one thing I would like to mention here is that generally, see, whenever you want to invest in gold base, it is definitely available in exchange, on the exchange, just like in any other stock you buy and hold. You can always just type in the ticker by name Nippon India ETF Gold Base. It is available, or similarly HDFC is also available. You can buy from there. The thing is that one advantage factor here is in physical gold. Whenever we want to buy the physical gold monthly basis, let's assume that we want to buy in monthly basis, might be there is a kind of you have to buy 1 gram, 2 gram, I mean few grams, whatever the idea is behind. Sometimes it might not be possible for us to buy in a smaller units, more than lesser than half gram or something. It might not be possible. Herein, wherein which our gold base, the unit cost will be generally less. Okay, and you can buy in a smaller units and on a monthly basis make it as a SIP also. Maybe you can invest something on a monthly basis and hold it as a SIP on month for a period of time. And one more point would be is that whenever you have an investment in gold, asset, as we have a different asset classes like gold, say fixed income assets and the equity, and kind of real estate. All this comes under the different asset classes. And whenever the gold, when we are investing, you can have put together whatever you are putting in gold base plus the physical gold can be put together as the gold asset. Okay, the investment in gold. So it can be generally between around 5 to 7%. It is ideal. It is considered as. So thank you very much for joining in this session. And if you like the video, please hit the like button and also subscribe to the Telegram channel. The link is mentioned in the description box. So let's meet in the next video. Thank you.